Hello everyone and welcome to my daily report market analysis videos with me, Richard Perry, market analyst at Hantec on Wednesday the 7th of August. There's been a slight degree of consolidation, I think you could argue, where the market has stabilised to an extent. The Chinese fixing of the renminbi on a daily basis is still underneath that magic 7 level against the dollar. Now you've got dollar yuan, which remains above 7 just slightly, but the yuan is allowed to fluctuate 2% around the fixing level, and that fixing level is 6.9996 today, so just a hair's breadth underneath that 7 level, a little bit higher than the market had been anticipating, and that had sort of hit sentiment a little bit through the Asian session. We saw equity markets just mildly lower for the Nikkei and the Chinese Shanghai Composite. But that's also driven safe haven plays again into upside moves. We've seen the gold price coming higher, ever closer towards that $1,500 area. We've seen the yen starting to perform better again, and look at treasury yields as well. Treasury yields opening lower, below 1.7%. On that 10-year, 1.56 on the 2-year, but look how flat that yield curve is. That 3-month 10-year spread is now at minus 0.35 35 basis points negative. So that ever flattening yield curve is certainly going to be a concern for the States. And what we've seen is the S&P 500, which actually rebounded a touch yesterday, and it's actually, as the European session comes in, S&P 500 futures were over 0.5% lower, but they're actually now trading up, and that's helped to drive the DAX, for example, higher. FTSE about 0.5% higher as well. So a little bit of an improvement in equity markets, even if that just slight safe haven bias continues to play through gold and the yen. It's interesting that the dollar started to pull back. There's some of the strength on the euro, also sterling back lower. This is another key factor today. The Kiwi is 1.6% lower after the RBNZ, the Reserve Bank of New Zealand, cut interest rates by 50 basis points. That was a surprise. Market was only expecting 25, and subsequently the Kiwi's been slammed, and also the Aussie dollar is a big underperformer as well. So really are seeing these markets that continue to show volatility in the moves. Now we've got a very light economic calendar today, not a great deal to really be worked up about. We've got the EIA inventories, which is the main factor to be aware of. Sorry, I'm on the wrong day, that's Thursday. EIA inventories at 3:30, expected to be minus 2.8 million barrels. A little bit of a consolidation on those distillates, and gasoline slightly lower as well, but that 2.8 million barrels on the EIA crude stocks, that would be an 8th consecutive week of drawdown on that. So theoretically that's WTI supportive, and it's interesting actually that what we are seeing amid all these market moves is that WTI is relatively holding up, certainly against the Brent crude, which has broken down yesterday to multi-month lows, and you can see that through the spread, which is now at just $5, which is the tightest it's been for for over a year now. So that's an interesting move there. But yeah, we've got again the continuation of a little bit of a rebound on the equity markets, but the safe haven bias is still there in the market. So that takes me to my chart of the day, which today is silver. Now what we have seen is gold breaking out to multi-year highs in recent days. Has silver finally joined the party? Well, yes, it has this morning, and breakout above $16.64 takes it to the highest it's been since June 2018, and it opens these key highs from April and June 2018 at 17.35. Now the original breakout above 16.20 was a key move, and that subsequently became supportive, but again we've now seen the breakout through 16.64 in the last in this morning, which comes with momentum indicators just ticking higher now. The MACD lines, are they about to bull cross higher? RSI in the high 60s again. So this breakout, if it sees it on a closing basis, certainly does open the upside. And 1735 comes into play. The importance of that support at 1620 is improves, and it certainly looks as though that weakness is a chance to buy on silver now. You've got this mini uptrend in play over the past few sessions on the hourly chart. Breakout above 1664 is holding, but certainly you've got a nice little band of support of a recent breakout 1650 to 1664, which throughout this session will start to be an area where the little uptrend comes in and supports as well. So that's a nice little buy zone, I would say, on any unwinding move. We're seeing the RSI on the hourly just unwinding back into the 70 area, but around the 45 to 50 area, I think that is a buying opportunity on the hourly RSI. So with that in mind, I wish you good luck in your trading today. Click here to subscribe to my videos and go to our website where you can join up for our trading webinars. Thank you very much.